Hey, Steve Saretsky here. I wanted to put together a quick little video on an event I went to last night in Vancouver. It was from renowned economist Michael Hudson, who was talking about the real estate crisis that's not only happening in Vancouver, but globally. He sort of explained, why it was happening. Anyways, he's a very smart guy. He's very well renowned. He's got a couple very popular books. His most recent one is J for Junk Economics. That's the title. And he basically talks about how central bankers and politicians and stuff they have their models all wrong. It's this mainstream new thinking where they just keep adding to the FIRE sector, which is the finance, insurance, and real estate sectors, and they're creating a bigger and bigger wealth gap, basically creating a class of real estate investors or landlords, and you have a class of basically renters. And he says it's because basically the system is being set up to incentivize these people to invest in real estate. He says you obviously have in these global cities, you have a lot of foreign cash coming in. He talks about a lot of it being illegal cash coming in, looking for safe havens, looking to park their cash, and it's all incentivized because the property taxes are relatively quite low. But they have basically a backwards model where they're putting more and more emphasis, like their income taxes are getting higher, but yet taxes on real estate are not. So he's saying that he should basically tax capital gains, and ultimately that central bankers don't really care. He gives an example again. This is a guy that's very high up. He's very well connected. He says, I was talking to the head of the Australian central bank, and I was talking to him about the economy and that sort of thing, and real estate prices. And he goes, yeah, it's great. We have this huge flood of foreign capital coming in. That's sort of keeping our economy going. And he goes, well, what about the poor Australians that can't afford to get into the market and can't afford to live here? And he goes, well, they don't fit into our model. So that right there was kind of like, for me, that was the turning point to see that these central banks, they really don't care. And you look at the Bank of Canada today. Today they announced they held interest rates firm at 0.5%. There's been warnings from tons of economists, investors, finance people inside the Bank of Canada that you have to raise interest prices here. This is going back to 2012, and they've been reluctant to do that. They've been warned that this creates asset bubbles. It's basically a misallocation of funds. All these central banks are printing money and they're all ending up in the stock market or into real estate. There's nothing really actually propelling the economy forward. It's not like we're producing more. You look in Vancouver, he talks about this as well. As you walk down a lot of these streets, go walk down Broadway, a lot of these storefronts are empty. Businesses can't afford to operate here. People can't afford to spend because they're so leveraged trying to pay their mortgages. And so he says it's all basically funneled into a fake economy. And he says you wonder why the top 5% are sort of getting richer and the 95%, and that wealth gap is getting bigger and bigger. It's simply because you're creating, basically, you're putting more and more money into the finance sector, and people are getting income taxed higher. Real estate is not. So he talks about funding funding a SkyTrain station. So let's say you're to extend the SkyTrain station. He gives multiple examples of this, but he says basically what they do is they up the fares so that the average person, it's even more expensive to get transportation. And he says what ends up happening is all the homes that are that go up in value because of the new transit line where they get built. He says their values go up. They get richer, but everybody else ends up paying higher taxes to basically subsidize that person who they got all the gains. So he's saying those sort of people should be taxed. Basically, it's a little bit of a controversial way of thinking, but at the end of the day, his premise is basically that central bankers and politicians have this economic model totally backwards. It's creating a bigger and bigger wealth gap in the next coming recession. Crisis, whatever you want to call it, things are only going to get worse because they just keep doing that. They're funneling more and more debt. Banks are providing more and more leverage. And also, he says, ultimately, and I've talked about this before, is higher and higher house prices don't make an economy wealthier. They impoverish it. They impoverish the society. And again, this comes basically back to people can't run businesses here. People can't go out and spend money because it's all tied up into real estate. And, everybody is sort of, house rich, cash poor, that sort of thing. So he says it's just totally backwards thinking. And again, like I said, you can see this with the Bank of Canada. They've kept it at 0.5% interest rate today, despite numerous warnings that you got to get up. You got to up these rates here. We got to cool the 33% increase in prices in Toronto. But they kept them firm, and so I get some people giving feedback on this. They say, well, yeah, the Bank of Canada has a mandate at 2% inflation. That's true. That is the Bank of Canada's only mandate. It's 2% inflation. But what metrics are they measuring here? Because obviously in Vancouver, we've had about a 25% inflation year over year in house prices. Rents have certainly gone up more than 2%. So, you're basically measuring the economy. We've got inflation, just not in the areas that the Bank of Canada wants. And it's funny because they actually just revised their GDP outlook. And they previously, in their last report, they thought that housing was going to be a drain on the economy in 2017. They've actually just revised it to say, you know what? No, it's looking great. We're actually going to have positive GDP growth from housing. And so that's talk about backwards thinking philosophy right there. We just saw prices going up 33% in Toronto, and the Bank of Canada is almost happy because they're saying, well, now it's going to be a positive contribution to GDP growth. For basically 90% of people, this is not a good thing. So, again, it's truly, truly fascinating to watch. You can see it again with these politicians. Just simply a huge reluctance on real estate. I don't see how that's going to change. It's obviously a little bit concerning. If I've put this blog post out on this this week, I think, and 7 of the 10 Canadian provinces, the number one contribution to GDP in 7 of the 10 provinces is residential real estate. In BC alone, it was the highest, of course. Obviously, everybody knows that. In 2015, residential construction as well as residential real estate contributed 22% of our GDP growth. 22% it made up 22% of BC's GDP. So that right there, that should basically tell you everything that we already know. Everybody always says, oh, there's no real job. Like BC, Vancouver is basically, it's real estate and that's it. What else do we have? And the numbers show that 22% in 2016 is probably higher. Who knows? Maybe it's inching closer to 25%. Is that sustainable? I don't know. The Bank of Canada is trying to basically leverage real estate, keep it inflated, and then in hopes that consumer spending comes back or oil goes up, or the economy basically miraculously recovers. But here we are at 10 years of rock bottom interest rates. It simply has not happened. And this is something that Michael Hudson was talking about last night, that it's really backwards thinking. So it's very, very interesting to watch. I would say that I've talked about this being a catalyst to potentially keeping house prices elevated, is there's so much incentive, because that's basically our entire economy is residential real estate, that these governments, despite what they might want to tell you, their actions speak otherwise. They're incentivizing to keep the real estate going. You can just see Christy Clark's first-time buyer loan program. As the market was cooling, prices were coming down. She adds more stimulus on, trying to make it look like she's making them more affordable. It actually pushed prices up, made them more unaffordable. And so this is sort of the mentality amongst politicians and central banks. I think they've got it backwards, and that's what Michael Hudson believed. Very good event. I've posted, I did about a 25-minute live stream on my Facebook page, so you can go and check that out. The quality is not the best, but you can definitely get away some good tidbits on that. So anyways, hope that helped. I know it was rambling on a little bit, but those are my thoughts today. Watching very closely what the central bank does, as well as government's huge election coming up here in May as well. And in Toronto, they are supposedly going to be releasing some new affordability measures, so we'll see what that brings as well. Anyways, hope that helped, and talk to you soon.